Hello! Before we dive into this important topic about financial education, I'd like to ask that if you find this content useful, please leave a like and subscribe to the channel for more valuable tips and information on personal finance and professional development. Your support motivates us to continue producing quality content to help more people achieve their financial goals. Now, let's get to the subject. Improving your financial education is a crucial step in making smarter decisions and building a solid financial future. Financial education is an ongoing process that involves learning about various aspects of money, from the basics of personal budgeting to more complex investments. It's a journey that requires dedication, curiosity, and an open mind to absorb new knowledge and apply it in practice. To begin with, it's essential to understand financial fundamentals. This includes learning how to create and maintain a detailed budget, listing all your sources of income and categorizing your expenses. A well-crafted budget is like a map that shows where your money is going and helps identify areas where you can save. Use tools like spreadsheets or personal finance apps to facilitate this process. Remember that a budget isn't a straitjacket, but rather a flexible guide that should be adjusted as your circumstances change. Understanding the concept of personal cash flow is equally important. This involves monitoring the money coming in, revenue, and going out, expenses, over time. A positive cash flow, where you earn more than you spend, is essential for financial health. This not only helps avoid debt but also creates opportunities to save and invest. Speaking of savings, it's crucial to learn the importance of saving regularly. Set short, medium, and long-term savings goals. A good rule is to try to save at least 20% of your income, but if that seems daunting at first, start with what's possible and gradually increase. The key is to create the habit of saving consistently, even if it's a small amount at the beginning. A fundamental concept that many people underestimate is the power of compound interest. This is one of the most powerful principles in finance and is essential to understand how money can grow over time when invested correctly. Compound interest is interest on interest and can significantly accelerate the growth of your assets. For example, if you invest $1,000 with an interest rate of 10% per year, after the first year you'll have $1,100. In the second year, you'll earn interest not only on the initial $1,000 but also on the $100 interest from the first year, and so on. Over decades, this effect can be impressive. Another important concept is inflation. Familiarize yourself with how it affects your purchasing power over time. Inflation is the general increase in prices of goods and services in an economy over time. This means that if your income doesn't keep up with inflation, your purchasing power will decrease. Understanding inflation helps plan investments that overcome the loss of money value. For instance, if inflation is 5% per year and your money is only earning 3% in a savings account, you're losing purchasing power, even though the nominal value of your money is increasing. Once you have a solid understanding of these fundamentals, it's time to educate yourself about different types of investments. Start by learning about low-risk investment options, such as treasury bonds, CDs, certificates of deposit, and other fixed-income securities. These are fixed-income investments that generally offer predictable returns and are considered safer. Understand how they work, the risks involved, and how they can fit into your investment strategy. Next, familiarize yourself with the variable income market, which includes stocks, investment funds, and ETFs, exchange-traded funds. These investments generally offer potential for higher returns but also come with greater risk. Learn about fundamental and technical stock analysis, portfolio diversification, and long-term investment strategies. Understand that investing in stocks is not a guessing game, but rather a process of careful analysis and informed decision-making. Real estate investment is another important area to explore. This may include buying properties for rental or appreciation. Learn about the pros and cons of this type of investment, including maintenance costs, taxes, and potential for appreciation in different markets. Understand concepts such as rental yield and how to evaluate the viability of a real estate investment. In recent years, cryptocurrencies have emerged as a new asset class. Although it's a more volatile and speculative market, it's important to understand the basics of cryptocurrencies and the underlying blockchain technology, given their growing role in the global financial landscape. Learn about major cryptocurrencies, such as Bitcoin and Ethereum, and understand the risks associated with this highly volatile market. Additionally, familiarize yourself with alternative investments such as crowdfunding, startups, and even works of art. These types of investments usually carry higher risk and lower liquidity but can offer opportunities for diversification and potentially high returns. Understand that these investments often require a higher level of knowledge and research. As you expand your knowledge about different types of investments, it's crucial to develop risk management skills. Risk management is a fundamental part of financial education and smart decision-making. Learn about the importance of diversification. Don't put all your eggs in one basket. Diversifying your investments across different asset classes can help reduce the overall risk of your portfolio. Determine your risk profile based on factors such as age, financial goals, and personal situation. This will help choose investments suitable for your profile. For example, if you're young and have a long investment horizon, you may be able to tolerate more risk in pursuit of potentially higher returns. On the other hand, if you're close to retirement, you may prefer more conservative investments to preserve your capital. Learn about protection strategies, such as hedging, which can help mitigate risks in your investment portfolio. This may include using options, international diversification, or investments in assets that tend to move in opposite directions under certain market conditions. An often neglected aspect of financial education is understanding the tax implications of different financial decisions. Familiarize yourself with tax laws related to investments, inheritances, and gifts. Understand how different types of income are taxed and how you can legally optimize your tax situation. This may include learning about tax planning strategies, such as using tax-advantaged retirement accounts. Moreover, it's important to develop financial negotiation skills. This can be useful in various situations, from negotiating a salary increase to obtaining better rates on loans or investments. Learn to research and compare offers, understand the terms and conditions of financial contracts, and effectively communicate your needs and expectations. Financial education also involves learning about financial protection. This includes understanding different types of insurance, such as life, health, and property insurance, and how they fit into your overall financial plan. Learn to assess your insurance needs and choose policies that offer adequate coverage without unnecessarily spending on excessive premiums. A crucial aspect of financial education is long-term planning, especially for retirement. Learn about different retirement savings vehicles, such as private pension funds, and understand how to calculate how much you'll need to save to maintain your desired lifestyle in retirement. Consider factors such as inflation, life expectancy, and potential medical expenses when making this planning. As you progress in your financial education journey, it's important to stay updated with trends and changes in the financial world. This may include following economic news, reading books and articles about finance, participating in workshops or online courses, and even considering working with a financial advisor for personalized guidance. Remember that financial education is not just about accumulating theoretical knowledge, but also about applying that knowledge in practice. Experiment with different investment strategies on a small scale, keep a detailed record of your personal finances, and regularly reflect on your financial decisions to learn from your successes and mistakes. Another important aspect of financial education is developing a growth mindset towards money. This means being open to new ideas, willing to learn from mistakes, and able to adapt to changes in financial circumstances. Cultivate a positive attitude towards money, seeing it as a tool to achieve your life goals rather than an end in itself. Furthermore, it's essential to develop financial discipline. This involves creating and maintaining healthy financial habits, such as living within your means, avoiding unnecessary debt, and resisting spending impulses. Financial discipline also means being patient with your investments, understanding that wealth creation is usually a long-term process that requires consistency and perseverance. An important part of financial education is learning how to deal with debt effectively. Understand the difference between good debt, such as a loan for education that can increase your earning capacity, and bad debt, such as credit card balances with high interest rates. Learn strategies to pay off debt efficiently, such as the snowball or avalanche method, and understand how debt consolidation can be an option in certain situations. As your financial education advances, you can start exploring more advanced concepts, such as technical and fundamental stock analysis, option strategies, investments in private equity, or even in international markets. However, it's important to remember that with greater complexity comes greater risk, and it's crucial to fully understand any investment before committing your money. Another aspect of financial education that shouldn't be neglected is financial ethics. This includes understanding the importance of honesty and integrity in all financial transactions, respecting financial laws and regulations, and considering the ethical impact of your investment decisions. For example, you may want to explore the growing field of socially responsible investing, which considers environmental, social, and governance factors in addition to financial returns. Financial education should also include understanding how money affects relationships. Learn to communicate effectively about financial issues with partners, family members, and colleagues. Understand how to handle delicate financial situations, such as loans to family or friends, or managing finances in a relationship. An often overlooked aspect of financial education is preparing for financial emergencies. Learn the importance of having an emergency fund and how to build it. Understand how to prepare for potential job losses, health problems, or other unexpected financial crises. This may include not only savings but also acquiring adequate insurance and developing skills that can generate additional income if necessary. As you become more proficient in personal finance, consider how you can use your knowledge to benefit others. This may include teaching basic financial concepts to children or teenagers, sharing tips with friends and family, or even volunteering in financial education programs in your community. Sharing knowledge not only helps others but also reinforces your own understanding. Remember that financial education is an ongoing journey. The financial world is always evolving, with new technologies, financial products, and regulations emerging regularly. Stay curious and willing to learn. Participate in online investor communities, watch webinars, read reliable financial blogs, and consider joining investment clubs to exchange ideas and experiences with others. Finally, it's important to recognize that while knowledge is power, true financial wisdom comes from the practical application of that knowledge. Don't be afraid to make mistakes, they are a valuable part of the learning process. The important thing is to reflect on these experiences, learn from them, and continue improving your financial decisions over time. In conclusion, improving your financial education is an investment in yourself that can pay dividends throughout your life. With knowledge, skills, and the right mindset, you'll be well equipped to make smarter financial decisions, achieve your financial goals, and build a solid and prosperous financial future. Remember, the goal is not just to accumulate wealth, but to use money as a tool to create the life you want for yourself and your loved ones. Keep learning, growing, and applying your knowledge, and you'll see positive results in all areas of your financial life.